So this is the entry that we have, and then we have our stops at that high, and then we are targeting the low of the day. Now, you can see that right off the bat, price starts moving in our direction. And so in this video, we are going to talk about sniper entries using the 1 minute time frame. But to understand these entries, we need to zoom out and understand how we got to the entries. So if you're new to the channel, subscribe. I have a free mentorship program. The link will be in the description. Let's jump into the video. So this is a high of week reversal strategy. And the high of week reversal strategy is very simple. Monday sets the high and the low of the week. And so with this strategy, we wait for price to come back to either the high or the low. So it can be on Monday. That is when we have Monday setting the high. Now, if Tuesday breaks out, on Tuesday we can still look for the setup at the high of the week if it extends the high, and on Wednesday and on Thursday. So if we look at, for example, this setup that we got on the New Zealand dollar, we have the low of the week set on Wednesday, and then we have the high of the week which was set on Monday. And as you can see, price comes back to the high of the week and breaks out. So what exactly are we looking for at the high of the week? So step one is actually putting in our timing window, because we don't just trade any time. So for Asia, the time is 8 to 11 p.m. New York time. And then for London, the time is 2 to 5 a.m. New York time. And then for New York, the time is 8 to 11 a.m. New York time. So we got this trade in the London session. So London begins at 2, ends at 5. Now, so the next step, if we are looking at the high of the week, is we look for breakouts. So when we scan through the pairs, we just want to see a breakout at the high of the week in our timing window. Then that screams, look at me. So once we see the breakout, then we look for the 1, 2, 3. So if we are looking for the high of week setup, so step 1 is time. Step 2 is breakout or out of the high of the week. Step 3 is the 1, 2, 3 setup or pattern. And what is the 1, 2, 3? So if you look at this pair here, then we have price at the beginning. So from 2, that is that candle going up, these 2 candles going down, and then these 2 candles broke out of the high of the week. So that gives us 1 up, 2 down, 3 breakout. And then these 2 candles, so number 2, the one in the middle, needs to be 2 or more candles. So if there is no 2 or more candles, we ignore that pair. Now, the moment we see we have a 1, 2, 3, and this 1, 2, 3 needs to be bound within our timing window, then the next candle should be opposite after the breakout. And once we have this 1, 2, 3 setup at the high of the week, we have a template for a very big reversal. So the probability of a big reversal are high at this point. So now we go to the 1 minute time frame. Think about this for a second. If everybody is selling their bags of maize, then it would be very stupid of you to sell when everybody is selling. In fact, you should be buying when everybody is selling, because you'll be buying at a discount, and then sell when nobody has the maize. So it's the same thing here. Now, we know that we are selling. Our bias is to sell at the high, but we need to wait for people to stop selling and start buying on the 1 minute time frame, so that we are able to position ourselves with leverage. So we can see that price was creating lower lows, and then price started creating higher highs. So when price starts creating higher highs, this is when we start preparing ourselves to sell, because we are in an uptrend and we want to get in when this uptrend is over and the new trend is forming. So let's see what happens. So we are creating higher highs, and then boom, we break structure and start creating lower lows. So we've broken structure here. So once we break structure, we want to see a retest with an engulfment candle. And then boom, this is our engulfment candle for the entry back down to the low of the day. And let us look at now an example of a trade we caught yesterday. It's still the same high of week setup. And Monday sets the high of the week. And then on Tuesday, as we are scanning through the high of the week pairs, we see that we have this breakout. So step 1, breakout is seen. Step 2, we put our time to see when the timing window begins. So begins from 8 to 11 p.m. New York time. This is Asia. And then we look for the 1, 2, 3. And here's the 1, 2, 3 breakout move. Does the next candle close bearish? Yes. Once we have this, then we can now head to the 1 minute time frame. Now, in the 1 minute time frame, what is the story? People are selling. So we are in a downtrend. We don't want to sell when people are selling. We want to sell when people are buying. So we wait for this downtrend to end and start creating higher highs. So price is still creating lower lows and then starts creating higher highs. So when we see higher highs, we start preparing ourselves to sell. Now, price is still creating higher highs, and then we break structure here. So this is the first instance we break structure. Alright, so this is telling us that this trend is about to be over. So we wait for a retest and an engulfment candle. But lo and behold, buyers are still strong. So let them continue buying. As long as price remains within the range of the high of the week and does not break out, we still wait for people to continue buying so that we can sell at a premium. So we wait for another M pattern. And then boom, we have this break in structure again here. So once we have that break in structure, what we want to see is a retest with an engulfment candle. And then here we have our engulfment candle at 2240, yes. And then we have our stops at that high. And then we are targeting the low of the day. Simple. So the advantage with this 1 minute time frame analysis is that we already have a template, a reversal template. If we see it, we know we are going to have a reversal. So what we just want to confirm is that price on the lower time frame has aligned with the higher time frame. So the probability of us having some hit on our trade becomes lower. And so as you can see, price goes back and stop hunts that area before dropping massively. So this is what I have incorporated now in my strategy. So I look for the weekly template or the signal days. On the trading day, once everything has been completed on the 15-minute time frame, I go to the 1 minute time frame to make sure that everything is aligned, and then boom, I get in. And so far we have great results. If you'd like to learn more about this strategy, I have a free mentorship program. Just check the link in the description. And if you got value from today's video, subscribe, and I will see you in the next video. Peace out.